Hi, this is the first video for the Chapter 2 PowerPoint. So we're going to have two videos. I just don't want them to get too long. So we're talking about some basic cost ideas, and we really need to make sure we understand these because they are not going to go away for the rest of the book. Alright, so this video and the second one will go over cost management systems. They'll explain the cost assignment process, and we'll define tangible and intangible products. We'll talk about how the income statement works for manufacturing and service organizations, and we'll talk about the difference between traditional and contemporary cost management systems. I won't hit every single detail because you can read the book for that, but I'll describe some high points, and hopefully from there you'll be able to go on and work the homework and the quiz. Alright, so accounting information systems, I think we kind of understand the idea that there's some way of keeping up with what's going on in a company. So we call it an accounting information system. It tracks all the transactions, all the costs, classifies, summarizes. It's what we're using to help us track everything so we can prepare the financial statements and to track everything we need so we can understand the costs going on that aren't necessarily GAAP information that we need to prepare financial statements, but we still need to know it to run our company well. Alright, so two major subsystems of our accounting information system: the financial accounting and the cost management information system. So here's a nice picture. So you'll have some kind, so any organization is going to have some kind of system that they're keeping track of all their accounting information. And there'll be the financial accounting and the cost management. Within cost management, there is the cost accounting information system, right, where you're tracking costs of products, services, some cost object, and then the operational control information system. So operational control is when we are making sure that objectives are being met. And they may or may not have anything to do with financial accounting. They may or may not have anything to do with cost accounting. You can imagine that you'd want to track how many new people you hire, and you'd want to make sure that you are completing all the EEOC forms that are required, and you would track those in your operational control system because that's part of your operations and you're controlling for it. So you can see that yes, there's plenty of things that need to be tracked in your accounting information system that's going to feed into other parts of the system. Alright, so here's the first thing you have to understand. We are learning cost accounting here, and there are some differences, and they make a difference, right? That's what accounting is we are learning all of our rules, all of our jargon, all the things we as accountants do. And a cost is not the same thing as an expense. Alright? So a cost is some cash or cash equivalent that you give up for a future benefit. So as we are doing cost accounting for something we're producing, let's say we're doing the cost accounting for this pencil here, right? Well, we're going to track the costs that go into making this. That's one aspect of cost accounting. So, but these costs then become this asset, a pencil, right? It goes in our inventory, right? So while it's in our inventory, it's an asset. It's not, these costs are not expenses. Expenses are expired costs. So once we sell this pencil, now we have cost of goods sold, which is an expense, right? So that's the difference between a cost and an expense. Cost is going to have some sort of future value for us, probably in the form of an asset. Expenses are expired costs. A loss is a cost that expires without producing revenue. So if this pencil became obsolete, or it broke, or it went stale, or something while it was in inventory, somehow got damaged, then that would be a loss, not an expense. And assets, of course, the pencil right now, as you can see, it's clearly an asset. For me, in my life, it's an office supply, but for Staples, where this pencil came from, when it was at Staples, it was the asset merchandise inventory. Cost objects. So it's important to understand this idea. in a lot of the problems we're going to work on this semester, there will be a specific cost object that we are costing. All right, so there's something we're going to measure and assign a cost to. For example, pencil. This is, if I wanted to find out the cost for this pencil, this is the cost object. But you could also cost the factory the pencil is made in. You could cost, if you were Staples and you had a customer who bought things from you and they only bought things when they were on sale, you could actually cost out that customer and see how much it cost you to service them. So there's a lot of cost objects. So it could be a person, it could be a customer, it could be a department. When I worked at a bank one time, I costed how much it costs us to train people. So the cost object was one trainee. It ended up being something like $15,000, a lot more than you would think. All right, so cost. So remember, when we start working these problems in a chapter or two, pick out that cost object. All right. When we start doing cost accounting, we're concerned with tracing the costs, right? So if I want to trace costs for the pencil, what all costs went into this guy? Well, you can trace costs directly, using what we call direct tracing, or you can use driver tracing. So we're going to learn both of this, and throughout the chapters we'll incorporate direct tracing and cost drivers. So a direct means you can specifically trace that cost to a specific object. So I know how many ounces of metal it took to make this, and how many ounces of rubber it took to make this, and how many ounces of lead and wood. Right? So I can directly trace this. Driver tracing uses something called a driver. So a driver is a factor, and it could be things like how much usage. Like I know if I run the pencil making machine for an hour, it uses a certain amount of electricity and a certain amount of labor, and right? So I could say per hour usage is a driver. All right. So we'll do some driver tracing. It could be any kind of activity, and we'll look at that. All right. So not all costs are direct. They can't all be traced directly, right? Like wood and metal and rubber. Some indirect costs get assigned, right? So indirect costs get assigned, and we call that allocation. So probably from now on, whenever you watch a video and I talk about overhead or any kind of indirect cost, I'm going to talk about allocating it, right? We'll allocate this indirect cost. All right. We also need to be aware that some products are tangible products, and some things that we cost are not a product at all, it's a service. So when I work as a teacher, I'm providing a service, right? So that's an activity that I perform for you, and you might be able to price out my service, and you'd take, if the university wanted to price the service of providing training and teaching to students, they might take my salary and the cost of maintaining the computers and the cost of a building, and they would figure out the cost of that service, but certainly there's not any product, right? So that's a service. A tangible product, here's your pencil, right? It's a thing, you make it, you can say, oh, it's got a certain amount of direct materials, it took a certain amount of direct labor, there was some overhead, and we got a pencil in the end, right? So product, service, pretty simple concept. I'm sure you get that, no problem. Costs, as we go along, we're going to divide up costs into things like direct, indirect, overhead. And certainly costs can be in more than one category, all right? So I don't want you to think that a production cost is not also a direct cost, right? So they can be in more than one category, so don't get confused about that. So a production cost is cost associated with manufacturing, right? So a production cost could be the cost of the wood in this pencil, the cost of the machine used to make the pencil, maybe it depreciates, right? So there's costs associated with production. Then there's non-production costs, like costs associated with the selling, the administration. Somebody has to be an internal auditor at that company. Somebody has to do the cost accounting, right? So non-production costs, somebody keeps the air conditioning running at the company headquarters. All that kind of thing happens. All right. So another way of categorizing costs, so there's more than one way of categorizing them. All right. One way of categorizing costs is as direct materials, direct labor, or overhead. All right, so I think that's pretty self-explanatory. Direct materials can be traceable to the goods or services being produced. So here you go. Wood, lead, metal, rubber, direct materials. Labor. Assembly line workers, whoever works on the assembly line putting together these pencils, that's direct labor. Whoever's the manager in the office overseeing it, whoever's the accountant, that's not direct labor. That is what we call overhead. So any production costs that are not direct materials and direct labor, things like depreciation, utilities, property taxes, all those kind of things, those are overhead. Again, these are all production costs, right? But they can be subdivided into direct labor, direct materials, and overhead. All right, so I'm going to quit right here and to keep the video short, and then we will take up with the next video right where we left off. So the next thing we're going to come up with is we're going to start with prime and conversion costs.